Nvidia reported earnings about a week ago, and the reaction was not good whatsoever. However, the earnings themselves were actually really good, and today I'm going to go over why Nvidia is a buy right now. Your time is valuable, so let's get right into it. As we know, Nvidia is one of the biggest companies in the world, so if there's any chance for someone to jump on it with a bear thesis or make people panic, whatever, sell, they will do it. However, this was a great quarter. Guidance was raised. Everything looks good. All right, guys. First up, what we're going to do is take a look at some valuation metrics, mainly the forward PE. This is probably one of the most popular, most used valuation metrics. The forward PE currently sits at about 25.4. Now, if we take a look down here at the analyst growth estimates, top line, Nvidia is expected to grow in 2026 56.55%, and bottom line 50.49%. Considering the forward PE of only 25.4, a lot of people would consider this to be a quite cheap investment, including me. So now if we click where it actually says the forward PE, and we click open graph, we can see where the forward PE for Nvidia has been over the years. You can see all the way over here in 2020, the forward PE came all the way down to a low of 25.5. Now the low in 2023 was 23.4. So the lowest forward PE that Nvidia has had in over 5 years is 23.4. Nvidia's forward PE currently sits at 25.3, so we're only about 2 points away from Nvidia having the lowest forward PE it has had in 5 years. Now, at the time of actually recording this video, Nvidia is down 4.45% in the pre-market. So this number will update once the market opens. What it'll update to, I'm not exactly sure, but it could be lower than what it was in December of 2023. Now, if we go over and take a look at the Nvidia chart, the lows in 2022, all the way when Nvidia was down to $11 a share, the forward PE was actually higher than it is now. Now, let's go ahead and take a look at the actual earnings report from Nvidia. These are the generally accepted accounting principle numbers, and revenue per share in quarter four fiscal year 2025 was almost $40 billion, 12% quarter over quarter, and 78% year over year. Now, for a company of Nvidia's size, these are incredible growth numbers. Now, one of the actual reasons that Nvidia has been down recently is because the gross margin numbers have been on a decline. Quarter over quarter, the gross margin was down 1.6 points, and year over year, the gross margin was down 3 points. Now, this can be worrying to some. However, if we look at the fiscal 2025 numbers, year over year, the gross margin was actually up 2.3 points. Now, this most certainly has played a part in Nvidia's downfall over the past couple of days. And that's all right. It's understandable for people to sell if they might see that as something that is worrying. However, Jensen Huang said this on the earnings call. As Blackwell ramps, we expect gross margins to be in the low 70s. Now, this is what people are worried about. When fully ramped, we have many opportunities to improve the cost, and gross margin will improve and return to mid-70s late this fiscal year. So Jensen is actually acknowledging the gross margin declines here in the earnings call. This might have been something that Wall Street missed, and he tells us that gross margins will improve and return to the mid-70s. So there's nothing really to worry about. Me personally, that's enough. That's why I'm long. Now, the next piece of news that I want to talk about that contributed to Nvidia's decline, yesterday it was down something over like 9%, and this added to a lot of that fear. So it was rumored that a fraud case linked to Nvidia AI chips. The servers supplied by Dell Technologies and Supermicro Computer made their way from Singapore to Malaysia, but the final destination remains a mystery. So then it goes on to talk about Washington cracking down on AI chip exports to China, US regulators eyeing Chinese AI firm DeepSeek, and then it goes on to talk about, while Singapore insists its investigation is purely domestic, the geopolitical implications are impossible to ignore. Nvidia's chips are subject to strict US export controls, and the US is already probing whether DeepSeek acquired them through third parties in Malaysia. Alright, so after reading all that, you might be wondering, how is this bearish for Nvidia? And that is exactly my point, right? Their chips are getting smuggled like drugs illegally, and somehow this is bad for Nvidia, that their chips are in such high demand, people are trying to acquire them illegally in countries. Very important thing to note is the US is starting to suspect that DeepSeek actually acquired Blackwell chips from Nvidia. Now, I'm sure you all remember the original DeepSeek crash where Nvidia crashed something like 20%. And these were all on the rumors that DeepSeek was operating without Nvidia, their expensive AI chips. Now, rumor has it that DeepSeek actually did use those expensive Nvidia AI chips, and it crashes further. See, that doesn't make a whole lot of sense. Another very important metric to take note of is the fear and greed index. Currently, we're at a number 16 on the scale, which falls under extreme fear. Nvidia has definitely played a large role in that. Now, while a lot of other people are fearful and selling, this is a great time for people with cash on the sidelines to actually buy. So there you have it, guys. That is exactly why I think Nvidia is a buy. If you agree or disagree, let me know in the comments. That's all for today's video. Peace.